Hi, hello, hi, this is Souradeep here. Happy New Year to all of you. Can you please confirm if you can hear me through the chat window? Yeah, thanks, sir. Very good afternoon or good evening to all of you, and a very happy New Year. This is the first time in the new year that we are meeting, and I wish you all the best in the new year in terms of your success, your happiness, your health for you and your family. Great. Now, for those who are new in this sessions that we conduct on every Friday after the market, let me tell you the structure of the session. Okay, in this session, what we do is that we share, me and Vivek sir, with half an hour each. First half an hour, obviously me, and the next half an hour, sir, sharing our views about the market. Okay, so. There is very little scope of taking questions in this session because this is a very compact session. For those who are in the StockEdge social platform or in the TMP can ask your questions there. We will be try to be as elaborate as possible in giving the overall uh, the way we look into the market. So let us start with the Nifty. Now, see what was happening from mid of October in the Nifty was a kind of a correction. Till that we have not seen this kind of a correction in the Nifty. So it was almost 2100 point correction that happened to this Nifty. And after that, after this correction happened, what happened is that, and we were discussing in the post market session around 23rd or 24th we conducted, we discussed this, that what I was seeing a structure of ABC, AB complete, and now there is a possibility of a B wave. That is because as in terms of Elliott wave, I have said that there is a scope of 0 to 5. So what I was observing is that uh, the A wave that was about to complete here, and possibly we can see pullback to 18,100, 18,200, and this was triggered at very fast pace, like from 16,400 to 18,000 almost, or 17,900 in terms of 10-11 trading session. It was a very fast move and it actually happened. Now, what is from here? See, what can happen here is that I had marked this level earlier also. This this pullback can go towards this 80,100, which I think is possible, and then the B wave get completes and we can see the resumption of further fall. Or there can be this possibility also that this total wave that we are right now observing has completed the correction and we are in a up move. So we have to see, as we move, we have to see, we cannot know beforehand in terms of daily chart. And I follow this very religiously. As long as close is above this 5-day high EMA, as long as 5-day high EMA is where at 70,780. So as long as market is closing above this, we are still in an up move. We can continue this up move. When we will come within 5-day high EMA and low EMA, that will be a range bound phase. And when we generally close below this, as you can see, 5-day low EMA, we are in a downtrend. Okay, so right now we are in an uptrend, we have to say, because though we formed two dojis in last 2 days, the close is still above to 5-day high EMA. That is, the close is as 70,812 and the 5-day high EMA is at 17,780. Okay, so whether the correction is complete and we will move on the upside from here, or this is just the B wave of correction, let me show you. So there are two possibilities. First is that this, which is the more probable in my view, that this is the A wave. Okay, caps lock. This is the A wave, and possibly somewhere here we end with the B. So we end with the B here, somewhere here. So that is the possibility. Or it can be a possibility that we have already seen ABC. Okay, like till this point A, then B, and then C has happened. That is also a possibility. So we don't know whether there will be again a retest around this 16,400, or market will actually breach this upper highs and go towards high levels. What are the caveats? Okay, let us look at what are the caveats right now. And at the same time, look at the Bank Nifty chart also before I go into any other chart. Okay, this Bank Nifty chart, see, there was a very strong correction, and many a times I told that this 34,000 was going to be very, very acid, strong acid test for from here, because there were earlier so many lows and prior highs there. So 34,000 was important, and it actually held. Now from here it has come to this level. It has crossed the previous swing high also. Now whether it is going to go up or stay below depends on if it crosses 38,200, it will go up. If it crosses above 38,200, or it is possible that it to correct from 38,200. So for now, for Bank Nifty, the fulcrum is around 38,200 for the next month. Okay, or sorry, next weeks. Now, what are the important caveats? Let us understand. If I look at the global market, the most alarming chart is of this crude oil. Okay, so I have tweeted many times, I have told many times, there is high possibility, there is a very high possibility of crude oil going to this 92, 93 and possibly crossing 100. Why I am telling you? See, right now, the global market is going through a tsunami. The global market is going through a tsunami of COVID cases. You see, in the last week, there was 1 crore 38 lakhs cases all over the world. Okay, if you go to the yesterday, if you go to yesterday, you will find there were 25 lakh cases. 2 days ago, there were 25 lakh, 26 lakh cases. So please understand, we are undergoing a tsunami of COVID cases. And especially if you are going into the office areas, in the roads, you will see very few cars right now are being driven, and a lot of people are doing work from home. In spite of that, due to supply demand scenario, if crude oil is above 70, and I when it crossed 73, at that point of time I warned that possibly we are going to see much higher levels, and it happened. It happens many a times in January, that uh, the January is a seasonally month, strong month for crude oil, so it happens many a times January that it goes up. Now what was happening at that point of time is that the crude oil, in spite of this tsunami of COVID cases, in spite of a lot of us staying at home, not going anywhere, not going to work, working from home, in spite of that, what is happening right now is crude oil is 80. Now, this is due to tight supply demand scenario. Now, this kind of COVID wave, if you look at this chart, see, like once in every 6 months you have this. So this will subside, possibly 1 month later this will subside and this will die down. Now think of the scenario 1 month later, if this actually dies down and COVID is actually possibly on the verge of getting over, because right now you are seeing the spike in cases but the death numbers are still coming down. You can see the clear divergence in daily deaths and daily cases. So possibly we are at the towards by June we will be towards the last end of COVID, and possibly after 1 month, this tsunami of COVID cases will come down. From what we are having 6 lakhs, 7 lakhs, we are now having 4 time cases, but death numbers coming down. So if people start going out, if people start moving and normal office work starts, you can easily understand that the way the supply demand is poised, crude can easily go to 100 plus level. And trust me, uh, I won't be surprised if I see a level of 110, 115, and that is 30-40% from here. India imports almost 85% of its crude oil required, and that's why there will be huge inflation and uh, big pressure on rupee if that happens. If crude oil supply is somehow not restored and things does not come, 90 is quite probable, like highly probable, and above 100 is highly probable. This is quite probable. Above 100 is highly possible. Even 110, 120 is reasonably possible, until and unless there is some kind of push to produce more crude oil. That I can tell you. Now, in this scenario, how the market will behave, I have real doubts. And also, because right now what we are leading to a UP election in February. Okay, from Feb mid, UP election will start, and March mid there will be results, and there will be 5-6 states election result. In that scenario, market will depend on the result. If by any chance the ruling government loses in UP, you will see market having a serious correction. Why? Because if it loses UP, there is very little chance for it to gain power again in 2024. And who will then gain power in 2024? Probably smaller parties. And in that case, the decision making in economic front become a little bit more populist. In that case, the share markets in general, what we have seen in the 90s also when this happened, does not do very well. So please understand, crucial events are poised in front of you. The crude oil, one thing. Another thing is that the five stakes election. I don't know. I am not a cephalologist. I don't know that which party will win. But if the ruling part disposition wins a lot of states or loses UP, then there is trouble. Now, so you have to poise, you have to make yourself a little bit immune. So what you do, probably when the March puts become liquid, try to buy few March puts, at least far away puts, uh, till the premiums are low. uh, Try to buy some 17,000 or 17,500 kind of, or maybe 16,500 kind of nifty puts, which would be quoting at very less premium. Try to buy them so that as the election results are nears, and if there is adverse adverse election outcome, your portfolio is actually saved. Okay, so what I'm trying to say you is, if you go to the NSE and go to the old site, new site, I have still not able to digest in a proper way. And I think there are a lot many people like me, and that's why they have continued this old site after so long of introducing the new site. Okay, so this is index future Nifty. I am selecting 27 Jan, getting data. Okay, going to the option chain. Okay, now in the Nifty, if I go around 31st March, okay, now you can see the 16,500 puts are also at 151, which is quite pricey, because market knows if there is a electoral uh, debacle, what can happen to the market. Still, they are quite pricey. But what I say is that if market goes a little bit up, if possible, buy according to the proportion of your or 17,000 puts, try to buy according to the proportion of your portfolio. So suppose you have a 20 lakh portfolio, you can at least buy uh, two puts, right? Two puts would cost you only 20,000 rupees, which is 1% of your portfolio value. If you have a 20 lakh portfolio, you have a 10 lakh portfolio, you can buy at least one put, right? If you have a 1 CR portfolio, you can buy at least 10 puts. So 10 puts would cost you hardly 1.5 lakh. So that is 1%, 1.2% of your portfolio value. That would at least protect you in case of some ugly surprise in terms of electoral outcome and market falls very rapidly. Remember this thing, okay? And not only election results, this crude oil is also very harshly telling me that market can be in trouble. Another important point that I want to show you is, see, the dollar index, which I was expecting to cool down. I was expecting dollar index to cool down from these levels and maybe come to 94, but it is not happening. It happened for 2 weeks, but it has become strong due to the crude oil. Okay, so dollar index is becoming strong. That is one point where rupee can weaken, and this one, see, this is again on the verge of 1.76, 1.75, the monthly chart of US 10-year bond. Once it crosses this 1.8 barrier and moves towards 2.5, you will see a decent amount possibly correction in risk assets, because the treasury yields will be yielding 2.4, 2.5. So keep an watch on this. And crude oil chart does look horrible, or does look threatening. The way it is shaping up, it seriously look threatening towards 90. Okay, so in that scenario, what will be your protector of your portfolio? What will protect your portfolio? uh Let me hide a little number of indicators. So as usual, uh, this is the back nifty weekly chart. Okay, as I say, 38,200 will be the next fulcrum. If I'm talking nifty metal, okay, nifty metal is just at the resistance. Okay, just at the resistance. Nifty FMCG tried to go up, but in case of higher interest rate scenario, it won't go up. So will be Nifty Auto. It will not do very well. In the case of though it tried to move up this, but in case of increasing interest rate scenario, it won't do well. But auto has something positive, that last year was very bad due to chip shortage. So if possibly chip shortage is resolved, there will be a tailwind in terms of that the problem is now gone, and there can be sale in EV and other things that can actually drive auto, especially talks like Tata Motors, Mahindra and Mahindra, etc. But auto still look good for next week. Nifty Pharma, Nifty Pharma has given up. Why it has given up? Because COVID is not proving to be that much of a uh, that's much of a worry this week, and it is given up. Now, our ultimate choice in terms of uh, sector remains to be, in spite of this small correction, remains to be this IT. And I have repeated many times that given the wave of digitization, and you know that a few days back the Apple stock reached around $3 trillion of a market cap. Given all these things, I expect this IT index from 38,000 to go towards 60,000 within 58, 60,000, or at least uh, not at least, there is nothing surety, but if it stays above 38,000, there is a good probability, I would rather put it this way, uh, it going towards 47, 48,000. If it remains above 38,000, it is at 38,139. So below 38,000, then you actually don't hold. But actually, if it is staying above 38,000, there is a quite good probability of it is going towards 48, 54,000. So given the scenario, I think that can happen to IT. See, what I was expressing few days back is that if I go to the web.stockedge.com and I open a stock Hindustan or Dabur India, any. If I go to the fundamentals, I would see that industry P is 60.56 of the FMCG industry, right? Industry P is 60.56. From in that, some stocks are 56, some stock are 75. That is other thing. Industry P is in the 60s. Now, given the digitization era, what I personally think is that if you go to the IT will assume, this is my hypothesis, that IT will possibly assume this kind of a valuation in P terms. See, industry P is 37. So I expect the uh, price earning ratio for this industry to go up in the in the tone of 50s 55s. So, and if that happens, there is around 50 40 50% rally, and these are highly growing companies. So because especially stocks like Infosys, so you can expect maybe a good amount of rally in IT. So IT, in spite of the small correction, remains a very favored sector for me, and I would definitely be focused on it if it remains above this 38,000. Now, for next week, okay, before going to that, let us recap one small thing. So last week, see, the best performing index were Bank, Nifty PSU Bank, commodities, energy, because the crude oil prices rallied, and these were laggard in between. And what did bad is CNX IT, the worst. But if I look at the global chart, and here I am looking at the global chart since the bottom, I will see that Nifty still is the best performing index. Nifty still remains the best performing index. Uh, the best index is Nifty IT, proper relative strength candidate. If you see the Nifty 50, this is the Nasdaq. It has bettered, and all global indices are below that. Okay, Dow Jones is near very top, so India remains the best performing index in the globe for quite some time. Now, if I go from October mid, I will see that Nifty became in one of the laggard, like with the Russian, Brazilian, Hang Seng, Bank Nifty, and Nifty become the worst index in this period of time till 20th. Okay. Now, what happened after 20th? Let us observe what happened after 20th. This from the 22nd. See, Bank Nifty is the best performing, then Nifty, and CNX IT is on the top. So Indian indices are again pushing up, but I really doubt how long they will be because of this crude, which I have a conviction that it can go towards 90. Conviction does not mean surety. Okay, conviction means there is a kind of outlook, and obviously it will be played through technicals and with stop loss, not uh, blindly. If I have conviction on Nifty IT, that does not mean I sell my house and put into Nifty IT. And it is not like that. There will be stop loss and everything in place when I discuss these things. So please understand, when we have an outlook, this is a kind of outlook, and this can be proven wrong, and that is why we have stop losses are also there. For crude, I think as long as it stays above this 77, see, once it broke 73.5, which I told, it came here at a 77, and it was kind of fluctuating there, and then it actually again broke out of 77. The day it broke out, the next day it was crossing 80. Now it has crossed 80 highly, and if it stays above the 79 80, we are seeing this level, quite good possibility that we may soon see 90 once the COVID wave subsides. Indian COVID waves, obviously it is going up. But the best thing about India, like all other global thing, is that, see, the death number is reasonably low in spite of having 1,17,000 cases, and that is the good thing. Last year, when we were having 1 lakh cases, we were having almost 1,000 plus deaths. So possibly the vaccines are working, or possibly the COVID is becoming more and more uh, milder, or in terms of the human tolerance. So possibly our children will go to school from the month of June and July, so everything will open up. In that scenario, I see quite a good possibility of oil surging higher. Okay, so keep these things in mind. Now, next week, in terms of stocks, what I see, if you ask me, see this stock. Let me figure out. Yeah, this stock looks good. Okay, coming back to the daily chart. Gujarat Fluorochem. If it crosses 2780, can go towards 3200. Keep an eye on this. Okay. JBM Auto looks good. Keep an eye on this. Pidilite looks good. Keep an eye on it. Titan looks good. Keep an eye on it. If it crosses this, no, Titan can actually form a double top around here. So not that bullish in Titan, but in other stocks. Actually, I gave very few number of stocks this week because I am relatively guarded on the first week of the year. So I gave very little number of stocks this week because I did not expect this sharp rally in the market also. So that's why, to form my view, I just wait for the first week to get over. Thankfully, this is over and we can share more and more stock ideas from the next week because the market stabilizes as the FII and everyone comes back. So from that point of view, and obviously the ITs, IT remain my favorite indicator. Sorry, TCS. Okay, can break out. Mindful can break out. And the chemical stocks. So SRF I gave on. Just a second. I shared this in my with my TMP students also. So if you see this, if SRF, this SRF I have given on 22nd December, okay, 22nd December, and told that 2500 possibly is coming. It took a fortnight and it reached there. And not only SRF, to be honest, many chemical stocks did well, like Balaji, Amines, beaten down stocks, but broke out and moved sharply this week. Alkyl Amines. So if the COVID is very strong, these stocks can continue to do well due to supply chain kind of issues have crossed these levels. So alkyl amines, Navin fluorine I gave you. No, Navin fluorine I did not give you. Sorry. Deepak nitride I gave you. I will show you that also. So Navin fluorine did not do well this week. It had done earlier. But Deepak nitride I have given to my students in the TMP, and I had given a target of 2800, and it is just 100 rupees up. Possible it can go up of this inverse head and shoulder. Few stocks I have given in this period of time had did phenomenally well, and I was giving less number of stocks during this point of time. So this was the ACL take, and the target was somewhere around this 1280, 1290. It went to around 1336. Still remain bullish as long as about 1250. So anytime it can turn around and give good thing. So that's from my side. Tried to give you a brief about the market with the global factors. From next 1 week, we will enter into a serious kind of a trading because of the participation, and liquidity will increase because all will be coming back. And I will, from at this point, hand it over to Vivek sir, who is waiting for us. Hi, sir. Uh, am I audible to you, Vivek sir?
Hi, good
Please.
evening. Can you hear me?
Good evening. Good evening, sir. Thank you.
Okay, good evening. Thank you. Thank you, Souradeep, for taking the session. Sorry. Hello, everyone. I've been missing from this for a couple of days, so I thought I should not miss it. Uh, Again, Corona everywhere. I hope you guys are safe and keep yourself hearty. So it's one of those weather where you go under weather fast. So I'm under weather, but I'm sure that this session will not impact that. Anyway, so let's talk about. Oh, wow, I can see 335 members are part of this. So very good, yeah. I can see more and more people are joining for these Friday sessions. Yeah, very good session. Week on week, we have been doing this for many months now, and Souradeep has been absolutely bang on in terms of his market directions. And I've been also been able to kind of give my decent view on the market and how the market is progressing. So I hope you guys are able to see my screen. Let me take a confirmation. Are you guys are able to see the screen? Okay, yeah, thank you. Thank you, Abbas, Aditya, Samir, Deep, yeah, Sunil, thank you. Thank you. Thank you to everyone. So let's talk about the market, what is happening in the market. So when we talk about the market, we obviously have to talk about the dollar, and this is the dollar index. So dollar index, although it was trending up, but it is around 96 level. So this is critical. If dollar remains here, uh, for some time. That means a time-bound consolidation which is happening in dollar here. Uh, because dollar is not moving up in hurry, and I recorded this video weekend analysis where I mentioned that until unless dollar goes up in a hurry, there is no area of concern. Market is correcting, which is a time-bound correction, and this is pretty much what happened. A time-bound correction happened, and market recovered. Uh, Largely, these kind of recovery happens because there are short positions which got built here, and this recovery is largely influenced by short covering. Because dollar is not giving any convincing decision to go up, that's why the shorts are covering up the positions. Plus, the rally in small cap and mid cap, which was initiated few years ago, that has come back again because again there was a correction there, and market knew that the correction will be short-lived, and small cap and mid cap is definitely because they are high beta, the chances of they rallying back is much higher. So we all know that the COVID scare is back, and globally, people have started talking about tapering, continuing tapering, new new round of money printing, etc., etc. So our stance that market will not get into bearish mode is pretty much there. Market will correct, and in every correction, there is an opportunity to buy these strong stocks. In fact, if you remember, I did mention in the social platform that market will go up, market will go down. When market was going down in the month of December, I did mention, I'll show you that that it will happen. Market will go up, market will go down. Uh, After December, January will come, Feb will come, March will come, and obviously market will recover. So staying invested in a strong stock is the best thing you can do. This is what I posted. Staying invested in the strong stock is something what you can do for yourself. And those of you who are invested in the strong stock have gained the benefit out of that, right? Okay, let's see. Apart from dollar index, what is happening in other? So what is happening in the yield curve? So US 10-year yield curve, which is a longer tenure yield interest rates in US. Just a minute. Yeah, why is the graph not updating? Just a minute, please. All right, so let's see the US 10-year yield curve. So US 10-year yield curve has gone up. That means there is a there is a scare now that long-term inflation will go up and overall yield is going up. That means there is an expectation that interest rates will go up in a longer time frame. And if you see 2-year US 2-year yield curve is anyways going up. So the fact that inflation is coming on board and interest rates are going up, that is the one I think party spoiler. Okay. If dollar starts going up and if they continue to go up, then obviously Indian market will also stop. It will not be easy for the markets to continue with the strong rally. But if dollar remains here and interest rate yield curve goes up and probably corrects or stays there for some time, then there is a possibility that market may continue the bullish stance. So how do we play? Again, it's very difficult to make a macro view on the market, and that's what my whole approach of explaining this to all of you is that it's always good to make a macro view of the market, but finally you see if market goes down, you have to be invested in strong stock, and if market goes up, you have to be invested in strong stock. So the broader view of the market definitely gives us a short-term direction of the market. So the short-term direction of the market is clearly that market is right now consolidating with a positive bias. The moment dollar starts showing the aggressive movement up again, then market will start either correcting or consolidating once again. So let us come back to our stock specific discussions. Uh, there are a couple of things which I wanted to discuss with you. You see, I will discuss with you an approach of looking at stocks. You see, today I saw this post by Smita ji, StockEdge Social, that these are the stocks which are monopoly stocks, and I'm sure that you have these lists from various sources which you already have it. But this was interesting list which I got from her. What I did was immediately I created a watch list. The watch list here, leaders. Okay, I created the watch list leaders. That means I have now the stock watch list here with me, where stocks with 50% market share in the product, stocks with 60% market share, 70%, 80%, and 100% market share. So now I have these stocks as part of my watch list. All I need to do is keep tracking these stocks and see if there is any stock where there is aggressive price action happening and participate in that stock. For example, Sangi Movers. Okay. Now you see Sangi Movers has been a positive stock for since October. It has remained positive for some time and it goes down, but it then retraces from its key moving averages and it has given a breakout. So, on the back of my mind, I know that this stock has high market share in its business and the stock is also showing strength. So, for me, the comfort of getting into this stock is quite high because I've added a fundamental reason to get into that stock. So, the point is that you can get stock ideas from any corner, any sources. What you need to do is make a proper tracking mechanism, and that tracking mechanism can be trading view. That tracking mechanism can also be StockEdge, where you can create your own watch list. Okay, you can create your own watch list in my StockEdge, and you add any specific category of watch list, and you start tracking the stocks based on the watch list which you add in StockEdge or TradingView. Why I use TradingView? Because I find their UI to be much more convenient. Plus, for chart view, I think TradingView is far better than StockEdge as of now. So Shanghai Mover is one stock which looks interesting. Look at this stock, Indigo. Now, this is uh, obviously the stock because of COVID, airline sector is facing again a lot of heat. But you see, it's a strong stock. So if I have to play a contrarian play against the theme, but right now the theme will be against Indigo. But as far as price action is concerned, it looks like the stock is strong and it may continue to show the strength. So what I will do is I will identify the previous swing high, immediate previous swing high, which is this level. Okay. So 2050 is my important level in Indigo. So if it crosses this level, I will enter this stock. Why I will enter this stock? Because it's a strong stock showing a very good momentum. And in its business, the stock has high market share. You're getting my point? Let's go to other stock, Delta Corp. This is also interesting. See, uh, so strong stock, momentum is high, decent enough volume, and the stock is showing price action. So previous swing high, which is here, so it has crossed the previous swing high. Again, I'll mark a high here, 300. So I can enter here with a small quantity and I can develop that quantity once this crosses here because I know that the next big resistance is coming here. You're getting my point? So how do I plan my action in any stock? Obviously, I can't, as I've said in my multiple videos, that I cannot and I should not put all my money in one stock at one go. So here I will not put full capital. Say for example, if I'm putting say 5 lakh per stock, I will not invest full 5 lakh here. I'll invest probably 1 lakh here, and I'll wait for this breakout to happen before I commit another 4 lakh. Why will I commit? Because I see it's a strong stock now. You're getting my point? Let's talk about Vinati Organics. So all these are stocks which has higher business market share. So Vinati Organics, again a strong stock, uh, given breakout from previous swing high. This is previous swing high, and there is one more swing high. There is one more level which is coming here, which is 2156. Here, my risk reward is not favorable, so I wait for this stock to either retrace back here, which is around 2000-ish level, or I will wait for a breakout to happen because my risk reward is only favorable when breakout happens and my stop loss is near to the breakout level. Okay. Let's talk about other stock like Asian Paints. Look at this stock. What a lovely stock, huh? It became a strong stock here. So my swing high was here. This is the swing high. So when would I have entered this stock? This high. So here I would have entered this stock. Again, I would have added position here, and I will again add more position if the stock will give me new breakout. Now this stock will not give me breakout because it's already trading at a lifetime high. So what do I do there? As simple as that. Invest small capital here. Let the stock retrace. Then invest another 1 lakh here. If the stock retraces further, then invest another lakh here. Why? Because the stock is a strong stock. If suppose the stock retraces here, you invested another lakh, and the stock reversed from here and crossed the previous swing high, then invest that full 5 lakh into that stock because the stock is in your total control. I hope you understand this thought. Let us see other stocks. India Mart, weak stock. I will not do anything. I will wait for this stock to become a strong stock. OCCL, Oriental Carp, I will not do anything. Colgate Palmolive. Now this is interesting stock. You see, although it's a weak stock, but you see the trend of RS is uptrend. Okay, and for the last 5 days, RS is showing a very strong uptrend. You see that green line here. What is this green line? If you go to RS chart, this is an RS by our beloved friend Bharat Trader, who is also in our social club. So if you don't know Bharat Trader, you search for Bharat Trader, and our friend is here, Bharat Trader. We have given him green tick because he is awesome in what he does. So this is the utility which he developed for all of us. So here there is something called RS trend, which is a five. I've written 5 period trend. What does this mean? That RS has been trending over a period of last 5 days. That's why it is green. So this could be an interesting stock to start building position. I'm not asking you to build position right now, but considering that it has high market share and the stock is seeing RS trending up potentially, it can go above zero RS. Potentially, not sure. I mean, obviously, if you are 100% sure you want to invest in this company, then only you will take that contrarian view. Otherwise, you will wait for the RS to become strong and enter when the stock is stronger. Let's take another stock, VST Tillers. It is just, this is interesting. See, this stock is showing positive RS and now it has just come into zero RS zone. 2 hourly also, it is almost there and super trend is buy. So I will buy this stock when the RS is above this. When the price breaks 2880. अगर ये 2880 के ऊपर गया तो मैं इसको बाई करूंगा. क्यों? क्योंकि it is a stock where business wise this company has high market share in the business which the company is. You're getting my point? Let's see more companies. Maruti, very interesting chart. Look at this chart. Do you think this stock is worth looking into? Absolutely yes. Look at the structure. High momentum, RS greater than zero, 2 hourly already showing positivity, and the stock is breaking out. In fact, I did talk about Maruti a couple of days ago. So let us, I think I did mention Maruti here. Yeah, see, I did talk about Maruti 2 days ago. Interesting setup when the price was 7801. The setup is quite interesting, isn't it? So, I mean, it depends upon what kind of risk appetite or what kind of risk reward ratio you want to target. So, the stock is already 7906. Okay. Uh, Stock will obviously be very strong conviction buying when the stock will cross this level, which is around 8260, which may take some time. But if you see the major levels, if I just draw these major levels, the stock is already trading above major resistance level, major supply levels. So it's a strong stock, and for me, there is no harm in building position in Maruti. There are different ways to play this. I mean, one of the ways obviously to keep on buying in cash market and you average up or average down, depending upon how the chart is planning. But the other way is you can also look at options. So let's go to option data of Maruti. So let's go to say here, let me go to Maruti. So people who like to trade options, they can look at this also. So this is option data Maruti. You see OI, Maruti, the current market price is 7,900. Okay, we don't have price here. Yeah. So we actually, ideally, we should go to uh, NSE site of Maruti, yeah. NSE India. Hmm. So this is your option chain of Maruti. So your price right now is around 7,900. And let us see the put option. So there are two things. Either you buy call option or execute a call spread if you want. So Maruti, if you execute a call spread, assuming that Maruti will take a resistance at around 8,250, and it's a strong stock right now. So what you can do is, if you want to invest the premium, so you can buy call option of current price, which is 7,900, 181 rupees, and you can sell 8250. It's not liquid. Yeah, you can sell this. So when you buy at 180 and you sell around 80, which is almost 100 rupee investment. With a 100 rupee investment, you can get almost 300 rupees with a 100 rupee investment, right? If your view is right. That is if you want to invest your premium amount, okay? If suppose you don't want to invest and you want to eat premium, then obviously you will sell put option, right? So you sell put option. That means if you believe that Maruti uh, from this level, which is 7,800, ideally Maruti will not go below 7,700, for example. Okay. So ideally, what should we do? 7,700 put option is almost 100 rupees, which is almost 28% IV. So this is not bad. So what you can do is you can actually sell a put option of 100 rupees. Worst come, what will happen? If suppose Maruti stock goes down, this put option will go up. So either you can sell this and buy a far out of the money put just to hedge a bit, okay? Or you can be mentally prepared that if suppose Maruti goes down, because it is a strong stock, I won't mind taking delivery of this stock, right? So if that is your primary hypothesis, then this 100 rupees put is not a bad option to sell, because even if the stock goes down, you are willing to buy and take delivery of the stock because RS is greater than zero. Obviously, if RS goes below zero, then you would not like to hold on to the stock and you would like to square up and book your loss. But at least by selling this put option, you are by selling this put option, you are with time. So if suppose stock price remain here, you get this 100 rupees. If suppose it remains there for this whole expiry, you get this 100 rupees. Basically, you are making money for the time which is left for the expiry. So different people will have different working. Some will execute call spread and invest 100 rupees premium. Some will like to sell put option and make money this 100 rupees and be in favor of the time. Some would like to do cash market. So some would like to build position. So if you have 5 lakh decided that yes, Maruti deserves 5 lakh, then invest 1 lakh here. If it goes down, invest another 1 lakh. If it goes down, invest another 1 lakh. Why? Because RS is greater than 0. And if it crosses this important level of 80 to 50, then if suppose you have invested only 1 lakh here, then you add on another 4 lakh because there is a strong breakout which has happened in this stock. I hope this is clear. This is the format which I follow, and I'm very comfortable with this format. I've been very patiently and handsomely, comfortably working on with this format. So it's up to you whether you want to adapt this or what kind of market participation you want for yourself. This is 50% market share, guys. Now let us see some names, which is 80% market share. Now let us analyze the stock MCX. Now, this is a very interesting stock, huh? Again, I would say that something what Reddington did for a long time, and Reddington, we all know that in StockEdge Social, we have been talking about Reddington for so many periods. I have been saying that although it's a weak stock, but the structure clearly suggests that the stock will give breakout someday. Okay, and it did. Okay, today, and that one day will वो बोलते हैं ना पुराने सारे पाप धुल जाते हैं वो एक दिन अच्छा रहता है तो आपका पुराना पूरा पेशेंस वो look at the consolidation which has happened in this stock. It went to become a weak stock, but then again it became a strong stock. And this was the time under around 150 odd when I posted here. And I said that to be tracked closely. Historically, I have mentioned this, yeah, somewhere here. This was today I mentioned, but historically, I have mentioned it a couple of times that yes, you have to track this very closely. So, and the moment it got interest from overall buying, then it went up. But it may not work all the time, right? You have this stock called Canfield Finance. Okay. Now I was holding this stock, but then I booked loss in this stock. Why? Because the RS went below zero, and I'm still positive about this theme of housing finance. But unfortunately, the stock is underperformer. So unless the stock shows me strength and sign of outperformance, I will not get into this stock. So right now, what is happening? Although 2 hourly chart is showing me strength, but the stock is still has to go convincingly above 200 period these moving averages, and RS has to show me convincing uptrend. Mostly, if RS comes around zero, then only I will make an attempt. Otherwise, I will not make an attempt. So this process, which I have explained to all of you, is very transparent and very impactful. So my humble submission to all my Stockage Club members, TMP friends, all Stockage family members. In fact, if you are not part of Stockage Club, I will advise you to become part of this family. You will find the right guidance to make you independent in this family. So now, let me just talk about one more thing before we close for the day. And you know that we don't take question and answer in this Friday session because it's largely what we want to speak about. Okay. If you have any question, you can obviously get back to us. There's a feedback form at the end of the session, so you can fill the feedback form. You can contact the support team. They are very proactive in making sure that your questions are getting answered. All right. I want to also talk about the strategy section which we have overhauled. Totally, we have reworked the strategy section, and people who are subscriber of Stockage, all of you would be. Please go through these strategies which we have reworked. We have been working on these strategy for almost a year, and trust me, the stocks which are coming out with these strategies are actually very good stocks. For example, look at this strategy. Surfing. Surfing is high momentum. Rowing is continuation. So let us just see the strategy rowing. So what are the stocks coming in rowing? So these are the stocks which are rowing. That means these are good stocks. Probably they will continue with their bull run. So let us take an example of say any stock. Let's take Finolex Cable only. Let's see Finolex Cable. So let us go to Finolex. Okay. So this is a strong stock. Uh, 2 hourly it's weak right now because RS is less than zero, but daily it's a strong stock. And this strategy is a sorry, this strategy is a position bullish strategy. Okay, that means this is not a short-term intraday strategy. This is a position strategy. So oh, what happened? Just a minute. Suddenly all these stocks went away. Surprising. I think the update is coming. That's why the stocks went away. Actually, quite surprising. Let me go back and again try showing zero stocks. Surprising. There is some bug or what? I'll get it checked. So, anyways, coming back to the stock. So, Finolex Cable. So, it's a strong stock. You see the trend. Uh, Very simple analysis. You see the simple analysis. Low, low, low. That means higher lows and higher highs. It made a lower high here, but it refuted the same. So low is been made again. So this zone becomes a very, very interesting zone. Yeah. And the stock is right now down here. Strong stock. So what I will do is the moment it crosses 550, I will enter this stock. So I will put an alert. So add alert at whenever it crosses only once uh, at these levels, it will send me TradingView will send me an alert. Yeah, let me just make it exact 550. Yeah, yeah. So if the stock crosses 550, I will enter this stock because it's a strong stock. So StockEdge helps you to figure out stocks where there is some momentum or something is happening, and these strategies are made to highlight these stocks. And you can use chart, and you should use chart to figure out your entry and exit level in those stocks. That's why I tell you, combination of StockEdge and TradingView is a deadly combination to fulfill your journey of trading the right stocks. And when it comes to investing, we are working on a lot of new strategies related to investing also. These are all combinations of a bit of fundamental and lot of price behavior. But future, we will also record investing oriented scanner so that you get the list of stocks which are worthy of investing based on their financial performances. For people who are just looking at investing right now, we have these investment ideas. These are also very good outputs. So for people who have not seen these ideas, please, I request you go and have a look at these sections. Lot of effort is going in creating such outputs for all of you. Take advantage of these outputs which we are creating. For investors, these are good outputs, and for traders, strategies are good strategy output to identify stocks for trading purpose. All right. So I hope this was a useful session. I can see 350 participants are still there. So I'm very happy that you're coming every Friday. It makes me feel good. And Shoradip obviously has been doing great job in making sure that you understand the right market structure. Uh, I'll see you guys again very soon next Friday. Tab tak keep enjoying the market. Great opportunity is there with us. Thank you, Shoradip. And thank you for the
Thank you,
team
sir.
who's coordinating this.
Thank you.